Welcome to the latest episode of the MFG Radio Network's Manufacturing Matters, where industry experts take deep dives into the latest technologies you need to consider to keep manufacturing moving.
Hello, everyone. I'm Elizabeth Engler-Modig, Editorial Director of GIE Media's Manufacturing Group of Magazines. Today's medical developments, aerospace manufacturing and design, defense and munitions, and EV design and manufacturing. Your presenters are Florence Joffrey Black, CEO, President, and Founder of MedWorld Advisors, and Dave Shepard, Managing Director and Co-Founder of MedWorld Advisors. And they are also the authors of today's Medical Developments MedTech Mindset Monthly column. MedWorld Advisors is comprised of expert merger and acquisition professionals, from advisors to M&A lawyers to past CEOs who have grown and sold companies, as well as executives in Fortune 500 companies, a dynamic team with backgrounds in M&A, finance, strategic marketing, strategic alliances, and R&D with proven track record of generating growth in both the U.S. and abroad. There is also a medical doctor on board with MedWorld Advisors. I'd like to thank our 2023 sponsors, ISCAR and Renishaw. ISCAR is the largest of the 15 companies comprising IMC, International Metalworking Companies, and has been a leader for nearly 70 years in the development of dynamic and a comprehensive line of innovative precision carbide metalworking tools. They have developed industry-specific solutions to optimize productivity. They understand the unique requirements of each industry and continually improve and introduce new ideas for machining intelligently. And Renishaw, a global leader in developing technology that supports manufacturing process control. Renishaw offers an advanced range of calibration, measurement, positioning, and inspection solutions. Specified by leading OEMs around the world, Renishaw encoders, calibration, and measurement systems enable superior process control down to the nanometer and picometer levels. Additionally, I'd like to thank today's sponsors, Hawk Ridge Systems and Makino. Hawk Ridge Systems is a leading provider of engineering and manufacturing tools, technology, services, and training in the U.S. and Canada. Its solutions include HP, Markforged, and Formlabs 3D printing, Arctech, Hexagon, and Creaform 3D scanners, and the complete portfolio of Dassault Systems offerings, including SolidWorks, 3D Experience, and CamWorks manufacturing software. And Makino, a global leader in machine tool technology. With a rich history of developing innovative solutions for part manufacturing, Makino is committed to providing high-performance, leading-edge machining technologies and innovative engineered process solutions that enable manufacturers to focus on enhancing their productivity and increasing their bottom line. Makino offers a wide range of high-precision metal cutting and EDM machinery, including HMCs, VMCs, 5-axis machining centers, graphite machining centers, and wire and sinker EDMs. So, Florence and Dave, welcome.
Thank you, Elizabeth, and good morning or good afternoon, depending on where you're located. As Elizabeth mentioned, I am Florence Joffrey Black, and with me is Dave Shepard. Wanted to, before we get started, thank the TMD team as well as their sponsors for this webinar today. We're going to be talking about M&A around the world, where we are today, where we're heading, what is worth knowing and noting.
And it's very timely for us because we're actually working on a few cross-border deals at the moment, and we'll share a little bit more about that as we get into the webinar.
Absolutely. So to give you a little bit of background about us, as mentioned by Elizabeth, we are truly an international company. I am the CEO, originally born and raised in Paris, France, came to the United States a while back. My career has been in the medical device space for quite some time, where I've worked for Fortune 500 companies, startups, as well as private equity firms.
And myself, I've been involved in the MedTech industry for more decades than I actually want to count. I don't count it by years anymore. I count it by decades. And been involved with, I've just really had the good fortune to have a global career, so which means I have really great friends around the world, at the C level, and at all levels of the companies, and which is really nice, from people in Asia and Singapore to people in Germany, all throughout Europe and the US. I've had the pleasure of launching MedTech products, and I think Florence has done the same thing, every major continent in the world. I don't think we've sold anything to penguins yet, so we haven't
Nope.
got the Antarctica yet, but maybe someday. We've also had the pleasure of doing a lot of international deals relative to cross-border M&A, and we'll be talking about that more today as we go forward.
So to let you know more a little bit about our company, we really exclusively specialize in anything that has to do with healthcare. So MedTech, biomed, biotech, dental, AI, digital health, doctors' offices is really where we are. You won't find us doing anything but medical. We are working in the space of innovation companies as well as mid-market companies. And we are truly global. We're based in the United States, but we have a legal entity in Hong Kong. And we truly have a global network of collaborators that we work with around the world.
And we have a lot of great strategic relationships, and we also we probably should have a similar private equity page because we have a lot of good private equity friends
We do.
around the world as well.
Very true. So with that said, let's look at MedTech M&A in 2023. If you were with us last year, we looked at 2022, what the trends were and where we were going. And, we're going to do that again this year, but with a slightly broader overview of not just the US, but also the global environment. So if you look at, by numbers, which is usually how we start, and you always have to look back a couple of years in order to find out whether you're on the right track where you are today. 2021, as we know, that was truly a banner year. There were more deals than, had happened in a long time. And we really were talking about massive mega deals, and a lot of money was exchanged. 2022 went down a little bit, and we had 81 deals cross-border. We're talking about big ones, of course, and about $68 billion, of value was exchanged. So where are we today in 2023? We got to remember, we're only looking back 6 months, right? Because we're just going into fall, so we can only go back 6 months. But so far, we've had 42 deals, which is more than what we had last year, if you were to just cut 2022 in half at that time of the year. But with that said, the value of the deal is definitely different.
Yeah, and the reason for that, Florence, is there's not as many of the mega deals that are taking place. And we'll talk more about that as this webinar goes forward. So some of the larger strategics getting together and combining. There's some of that going on, like Globus just combined with NuVasive, but they were smaller companies comparatively when you think about some of the previous years where Becton Dickinson bought a Bard, Medtronic bought a Covidien, that sort of thing. So the total value may be less, but the actual volume of deals is continuing to be very strong and they're very focused strategic deals, and there's very opportunistic for private equity as well.
Absolutely. So as Dave mentioned, the notable changes from last year is, again, the focus right now is really more on quality mid-market deals and strategic acquisitions rather than, the big multi-billion-dollar deals that we've seen in the past. Interestingly enough, we really haven't had a major public company do an exit this year so far, which also gives you, higher numbers when you're looking at it from that perspective. With that said, we've seen some, quite large deals. Olympus, for example, their microscopy division went to Bain Capital for $3.1 billion, and then Thermo Fisher did $2.8 billion acquisition of the binding site group from Nordic Capital. So there's still some of those big deals, but there are less of them, and the size is still not comparable to what we've seen in the past.
Yeah, and the interesting thing about the public market, and I think everybody is aware of SPACs, the specialty purpose acquisition corporations that were kind of a big trend from 2000. They started in 2017, 18, really bigger in 19, 20, and into 21. And then a lot of those famously blew up, and they really didn't create the value. Some did, but a lot of them didn't really create the value that was anticipated. So many of those dropped in valuation. Some of them are actually in Chapter 11 today, or even 7, after creating hundreds of millions of dollars of capital and then not executing on their plan. So I think that's created a little bit of a shyness around the public markets relative to not only to MedTech. I think that's been across the public markets. We just recently have seen a couple of new IPOs go out, not in the healthcare industry, that's kind of tested the waters for 2023. So we're hoping that, and they seem to be doing well. So hopefully that'll be able to give opportunity for companies across segments to get back into the public markets and do it in the right way, do it at the right value, so that they have the opportunity to grow versus the ones that were overinflated in value and then dropping later on.
So if you look at M&A around the world, you can't really look at the world as just one big space. So we have to look at it in really what we call three major regions. So we're going to look at North America, Europe, and of course, Asia Pacific. So we still have to go back a little bit to 2022. The trend still is the same of where we are today with regards to MedTech. Healthcare is a number of different things that go under this. You have providers, you have, life science, you have payers and other services that come into it. But MedTech is a very unique portion of those deals.
Yeah, and it's interesting when you look at the total market. There's some trends that are going on within these segments, and we'll talk more about that as we go through these slides. There's some things when we start talking about some of the challenges on the mega deals. And we'll get into that. And some of this is about the regulatory looking at it in terms of the FTC in the U.S., the European Commission in the EU looking at mega trends and large entities and antitrust behavior, and that's even being looked at sometimes in the state level across the U.S. with some of the deals that are happening with industry consolidations by some of the private equity roll-ups that have taken place. So interesting things to observe.
Absolutely. So we're going to, if you look at the, at deal value, again, you can see the trend. It's really interesting. We have, again, less of those mega deals and more of the mid-market, which actually, for the industry overall, is we look at this as something extremely positive. I'm sorry.
Yeah, I think, as we're going to talk a little bit more about, we're seeing more of the focus on the strategic side as far as the strategic companies. I think it's pretty well known that while they do all spend money on R&D, they have their pipelines. The reality is it's very challenging for market leaders to disrupt themselves. So for them to be able to continue to grow, they have to continuously look outside for new innovation, new technology. And when those companies have proven themselves, because they don't like risk. So when they de-risk the regulatory opportunity, they de-risk the commercial opportunity, then the IP, then they're happy to jump in and buy the company to put it into their sales pipeline. And then on the private equity side, that really hasn't stopped at all. That's been a continuous interest in this industry, which we'll talk more about as we go forward.
Absolutely.
In fact, speaking of that, as this slide highlights, there was a study done by a group called Axial that healthcare ranked the 6th for deal flow. I think this was for 2022, if I'm not mistaken. And
beginning of 23, actually.
Yeah. But it was the first for the pursuit rate, meaning the number one type of business that private equity is looking for, if people that are involved in healthcare, MedTech type of opportunities. They are very focused in this industry. And why? Because they understand that for the most part, this is a recession-proof business in healthcare. It's very sticky if you get into MedTech across different levels. So private equity is very strongly looking for opportunities. The challenge is that there's just not really a lot of good companies that are for sale. And so when they do become for sale, they are getting really good value because they're getting into competitive situations. So which is good for our business. We like to see that take place.
It's also good for the business owners. Absolutely. Right. So, one of the things to consider as to what's changed between 2022 and 2023 is that lending has become more challenging. So when you're looking at companies, purchasing another entity, they have to borrow money, right? And so right now, there is a tightening of, numbers, high interest rates. And if we recall, the Silicon Valley Bank fallout had an impact and created a little bit of uncertainty with regards to some buyers. It, of course, impacted companies themselves, but with regards to buying, that also kind of sent a little bit of a red flag signal to some of the potential acquirers.
Yeah, so what do we need to consider about this in terms of these impacts on M&A, specifically in North America? for a long time, really since the quote unquote Great Recession, the industry, there's been in terms of taken from the Fed level, the industry has been positively impacted in terms of availability of money because of quantitative easing by the Fed. And so they over a period of time, they made money more available. It was really free. In some places there was like negative interest rates in some places, and they were giving money away. So the access to capital was very available, very affordable, and that led to a lot of opportunity in terms of companies, both strategics and private equities, and invested into things that they should, and creating great valuations for those, which are still sustainable at the moment. But it also created opportunities for things that maybe were not quite as sustainable, for maybe a lesser valued assets that maybe didn't quite have all the pieces in place. They weren't as solid in terms of what they had developed in terms of sustainability. I think the digital health tech market was probably one of those that got overinflated during that period of time. There were higher valuations for digital therapeutics, like a company like Pair Therapeutics was one of the SPAC companies that I mentioned, but the money was just so easy for everybody to be able to get. So why not throw 500 million at it and see what happens? I guess was the approach. And those kind of things are not happening today because now it does cost to be able to get money, just like it has historically in our country. It's always cost. At least in the last century, it's always cost to be able to get money. So the interest rates are back up again, and banks are just having to be wiser about what they're lending. However, they will still lend money for good quality assets and good opportunities. So that's why at the end you'll see that we're still bullish on where we're going from here. And the geopolitics and the world economy, that's one of those things where sometimes you have to stop reading the headlines and just do business. We travel the world, and people are doing quality business around the world. Yeah, there are some scary things happening when you think about all segments of the market. At the same time, there's a lot of great things that are happening as well. So you want to be aware of those things, but you don't want to let it stop you from going forward.
Very true. So if we look at some of the notable trends, as Dave mentioned, early on, less mega mergers, and there are a number of reasons for that. There's again, a question of how many mega mergers can you have without the government actually saying too big is too big, is definitely one thing. But the other thing is there have been a lot of those mega mergers happening in the last 4 or 5 years. And purchasing is one thing, but then you have to start integrating, right? And that's how companies really start putting things together. So after doing all of the buyings that they've done, the question is, how do you put those companies together? How do you integrate things into your portfolio? What do you decide to keep? What do you decide to get rid of? Because ultimately, those mega mergers, it's not 100% fit when you buy, that kind of a deal. So that's definitely something where we know that's already starting when we're looking at, divesting. But we also know that in the future, there's going to be a lot more of that taking place in the years to come.
Yeah, for example, to your point about fit, when Medtronic about 5 or 6, 6 years ago, they bought Covidien. There was some of that parts that was really a good fit, and then they end up selling other parts. They divested over to Cardinal Health because those portfolios were actually better suited for Cardinal than for Medtronic itself. And now Medtronic, as we noted on this slide here, they're in the process of divesting another part of that former Covidien business and spinning that off, the respiratory and patient monitoring business, into its own business unit. GE Healthcare recently did the same thing, where GE corporate spun off GE Healthcare, same thing. J&J just spun off its consumer business unit. They call that Kenvue now. 3M is in the process of spinning off its healthcare business unit. And we think those are actually all good things. Like what we're seeing right now from GE, they were really challenged over the last few years to be able to do quality deals because they were having to pay a tax to GE corporate because GE corporate had a lot of debt. And I remember from my career back when I was at Tyco, we had a similar challenge when we were part of the conglomerate at Tyco International, and we were part of Tyco Healthcare. And we were making money, just like GE Healthcare has been making money. But the challenge is we had to keep paying back money to corporate to pay down the debt load they had from all the M&A it had done, and some of it not so wisely. And I think GE has been through the same thing. And now they're on their own, and they can go ahead and make their own decisions. They're definitely a profitable group. They have cash flow, and they're making acquisitions. We've seen that since they've spun out. And so this actually could be good for the industry because it allows more opportunity for innovation, for those tuck-ins that we're talking about. So it's a good environment for entrepreneurs as these types of portfolio divestments take place. And I guess the other thing that we're thinking about in terms of right now, what's going on in terms of trends, is people are thinking about China a lot. We talked about geopolitical on the last slide. China has been a part of M&A, sometimes directly, sometimes indirectly. There were a lot of deals over the last decade relative to doing acquisitions in China. It's a bit more challenging right now.
So if we're looking at, what's hot and what's not, as we call it, there's definitely an emphasis right now on the digital segment. We've talked about digital, in the last couple of years, and it has had a lot of different definitions. But it's finally finding its place in a way as to where it fits within the world of medtech and in the world of healthcare, which means that it actually got some people kind of to leave the space and others to come in, or the ones that are in right now are actually good, what we call good digital companies, right? So the valuation is not wild the way that it was maybe 2 years ago. And yes, there's been a slow down in funding for some of the early stage companies. With that said, there are some really good, solid digital companies that are really, emerging on the market.
And let's be clear, when we say that it's the valuations are changing, it's mostly for the ones that were the unsustainable companies that really hadn't proven themselves yet, that they got extra investment, they got extra valuations. The companies that are still quality assets, they're still getting good valuations. And but the ones that are the ones that are really leading the pack, are really being able to, in some cases actually right now, acquire other entities to be able to consolidate and grow and become stronger assets. And then the other ones that were kind of in the middle of the pack or early stage and just good companies, but didn't quite hit that funding window. Now they're having to figure out how do they survive, and maybe that's by an acquisition, by joining force with somebody else. That's actually been a little bit good for our business. To be candid with you, good news last year. We went on a couple of digital health things, but one in particular was a deal that we did out of the UK. Speaking of cross-border international deals, it was a company that was a digital surgery company that it was a very strong asset. They were in the right place. They were doing it for the right reasons, venture backed, and they had a lot of interest both from private equity and from strategics, and they were able to get a good valuation. That kind of opportunity can still happen today for good companies that are out there.
Sure, and that's what we really refer to as good digital companies. At the end of the day, the ones that have really good clinical applications, that's important. And when you look at AI, right? AI is everywhere, but what does it really mean, right? So, Dave, I don't know if you want to talk to that point for just a second. In a way, AI is back to where digital used to be. Digital used to be a lot of things. AI currently is a lot of things.
Yeah, there definitely has been those things that are really trendy throughout my career. Going back to the .com days, everything all of a sudden they threw in a .com, and all of a sudden it got extra value. And we had people that were leaving Tyco Healthcare and Covidien back in those days. Actually, it wasn't Covidien yet, but Tyco Healthcare, and it became .com, and then they'd be back 2 years later because that it was exciting, but then it didn't go so far. And then we had the same kind of thing happen with some of these digital health things we talked about, digital therapeutics, and then right now the big thing is .ai. And companies that are claiming to be AI. And then there really are some good ones that are doing an excellent job. The thing that's really happened is since this whole thing has come out this year around Microsoft and ChatGPT, and then others behind it that are trying to compete with them, it's put a lot of noise and spin around AI into the public markets and into investors. So now everybody who wants money, whether it's investment or to be able to sell themselves, they think they have AI. And in some cases they might. Some cases It might be machine learning. Some cases might not be, and then other cases, really could be that. So what you really have to do when you're thinking about, from the buy side of that, is really understand what it is that they truly are doing, and can they explain that, and we'll give the benefit of the doubt to somebody who's doing really good machine learning, that's very competent at things that couldn't be done before, but just by standard algorithms, really can fall in that category. And then people that are moving next level into AI are interesting to watch. But you really need to understand what it is. And for the companies that are looking to sell, we would just give the same thing, as if you really have got it, you've got something to sell, and we'd love to talk to you. And if you don't quite have it yet, kind of really understand how you validate what it is you're achieving, and then people will listen to you a little more seriously.
Very true. And then another thing that's currently hot is still robotics, right? So in the world of healthcare and medtech, it's a constant evolution. Where we are today and where we're heading, it's pretty interesting. There are the major players currently on the market, and then we actually are starting to see some really innovative companies coming in in the world of robotics as well.
Yeah, with that said, there's been a lot of money invested in robotics, just like there has been everything else in the digital health categories, as we've been talking about. And the interesting thing, and they're getting footprints, they're getting starts, and I think some of them 5 or 10 years from now will really have a place. They might be owned by somebody else, or they might not. They might be the next public company. In the meantime, what we do see is Intuitive Surgical is not quite yet scared. They are doing good things to continue to grow what they're achieving in the marketplace, and they're growing as strong as they ever had. And I think the reality is there's still a small percent, even with Intuitive's market presence, there's still a small percentage of number of procedures being done by robotics. As others come into the marketplace, like Medtronic and J&J, is going to expand the utilization of robotics, and I think there's going to be room for all of them to be able to grow. And then the smaller players with innovation, they'll have a chance to either create their own pathway and their own presence, and they may end up selling to one of them. If you do, we'd like to talk to you. Or you may have a pathway to be able to blow up and be a big public company. In that case, we wish you well.
Absolutely.
And then in the orthopedic market, Stryker has really done a great job with Mako, and they've really been driving something that people said that couldn't be done relative to the orthopedic space, and the use of CT into some of these standard hip replacements, knee replacements. And that's really driving change in that marketplace, and others are following to be able to connect with it. So we're seeing transitions in orthopedics. That's really been good for the big guys, but it's also good for the little guys, because we're actually working with companies that have innovation in that area to be able to either compete with them or to be additive to those companies.
Sure. I will add one thing to that is robotic right now is, overall accessible to some of the larger hospitals rather than the smaller ones. And so there's still a lot of growth that can happen and will happen in the future as, smaller hospitals now have access to robotics at a better price, just because it's becoming more competitive.
So for North America, again, in summary, just the other trends, there is the China question. We talked a little bit about that already. Valuations are more reasonable for the early stage companies. What do you mean by early stage companies? Companies that really aren't making profits yet. Those companies may have got overvalued for a couple of years because they were digital health, that sort of thing. The ones now sometimes are trying to relabel themselves as AI. They're still not getting overvalued, even if they say it's AI. If it's not really, you really have to have proven something to make sure it's proven that it's scalable before they can get there. The quality middle market companies, though, are still getting excellent value, and because we talked about it a couple of slides ago, the reason is there are only so many really good quality middle market companies that are out there in the marketplace. And what do we mean by a quality middle market company? It could be for a company that's been around for as little as 3 or 5 years and making $1 million of EBITDA, or it could be a company that's been around for 20 or 30 years and making 3 million, 5 million, maybe 10 million, or $20 million in EBITDA. Those companies, there are a lot of private equity entities that have raised a lot of money with the thesis that they can go buy those companies. And it's not just 1 or 2 of them, it's 50 of them, or maybe even 500 of them. So which means that when you have a good quality company, and you are in that middle market, and you're a med tech, life sciences, biotech, any of these types of business, digital health tech, you're going to have a good opportunity to have a good conversation with potential buyers about your value, and you will be sought after. As we mentioned before, it was #1 business that is sought after.
Absolutely.
And the other thing we're seeing is that going back to the early stage companies, the demand for clinical and economic validation is back. That it has to be proven in order for you to even have a chance of proving your scalability.
Yeah, you need to have a clinical unmet need to start with, and then really have clinical validation to go with it. Absolutely.
So in summary, for North America, the timing is now. If you're thinking about selling, or you know somebody who's thinking about selling, encourage them to do it now. It could next year could be a now also. The thing is, we don't know. It's just less certain. So if we were advising somebody today that had a company, and we do advise a few of those companies, what we're telling them at the moment is, if you're thinking about doing it in the next 12 to 18 months, do it now. The money is available. There's no major tax changes at the end of the year. And of course, always talk to your tax advisor, because every business situation is a little bit different. The opportunity is here. The money, the dry powder is out there. The strategics are looking for tuck-ins. So there's opportunity if you're in the right segments for it to be competitive between strategics and private equity. If you're not a strategic deal, that's okay. There's still plenty of private equity dry powder out there. That companies that will be interested in, private equity firms that would be interested in working with you. And there are a lot of variations when we're talking about private equity and private equity firms. There are some of the classic ones that people have heard about that they buy, and over a couple of years, you kind of feel like some of your assets have been destroyed and that sort of thing. On the other side of it, there's been a lot of good companies coming in, private equity firms that have come into healthcare in the last few years, where they brought on good operating partners, people that have actually been in business, in the industry, like Florence and myself have been, and they actually understand the value of these companies. And so when they make the acquisition, they're actually buying to figure out how they support them. And the right ones are really doing it that way. They're thinking about, how do I partner with the current management to grow the company over a period of time, the next 3 to 5 years, and really build something special. Those are the ones that you want to be talking to. We're also seeing more cross-border deals. We're involved in a few of those. We mentioned last year we did the UK deal to the US. We've previously done a Canada to Israel. We're currently involved with some things over in Europe that looks pretty international. We recently, last couple of years, had a German company make an offer on a US company. So very international right now as far as what's going on. And that also helps to make it more competitive for quality companies.
Absolutely. So if we move towards Europe, the factors are slightly different. And one of the reasons what we're looking at of those 3 regions is there's some things that are similar and things that are quite different. So, we were talking about the geopolitical issues that we are facing here in North America. For Europe, the war in Ukraine is next door, and that really does have a different impact on the way people are looking at what they're doing today and where they're going tomorrow. So for them, it translated in a number of things. Uncertainty is there, but it's also high cost, right? So the high cost of living, everything went up. Yeah, things went up in the US as well, but for them, it definitely has a different level. And then energy, which is vital in order to run a number of companies and manufacturing facilities, has also gone up. So it is a different factors that they have to consider in a very different way than we are. It affects, the economy, and it means that some countries in the EU are, facing recession, and that's also a different world than the one that we live in. But I think that the biggest issues right now that a medtech company faces in Europe really has to do with MDR and the cost that it currently that they have to actually put into their business in order to keep up with the never-ending demands of the changing regulations.
Yeah, the MDR issue, and everybody in this industry, if you're in this industry, we don't have to tell you about MDR. It's 3 letters, but it probably should be a 4-letter word. So you call it MDRX or something, because it's created a lot of extra costs with no additional value for the industry whatsoever. And it's putting some products off the market in Europe. It's also taking some companies that have been in the business in the segment, smaller companies, it's actually having them reevaluate if they want to be in this business. And we're talking to a few of them, and we love it when we work with a company that wants to sell for the right reason. They built something and they want to be able to go do their next thing, their next venture, or they just want to go play golf or spend more time with their family. We just love that. But when somebody comes to us that just says, we want to get out because we're tired of dealing with regulatory, that's sad for us. However, that's a reality a little bit with the MDR. So we're happy to help anybody regardless of the situation. It's unfortunate that's kind of self-inflicted wounds in Europe at the moment. Hopefully that'll change soon.
One can hope. So if you look at, what's hot and what's not with regards to Europe, digital, it's the same, kind of the same outlook on digital as we had in the United States. Same thing on AI. Robotics, as we mentioned, there's a lot of changes that are taking place. And in Europe, what we're really are starting to see quite heavily is a lot of innovation coming out of Europe. And that's actually very encouraging. There are a number of companies that have really looked at the market and the technology and have figured out that there are some things that can be done differently, better, added to what already exists in robotics. And I'll let Dave talk about an example.
Yeah, we're happy to share about the example we listed here. The company is called Ortoma AB. They're based in Sweden. They've developed an AI-enabled surgical planning tool solution for orthopedics, for used in replacing hips, replacing knees. It could be spine, shoulder, it could be anything. And it really is automating the process of surgical planning, which historically has not been something that surgeons have really been that excited about doing. However, surgical planning is one of the keys to precision medicine, especially when it comes to orthopedic surgery. So they're making it easier for that to get adopted. And we were able to, last week, just announce that they've made a deal with Johnson & Johnson for a global distribution of their AI-enabled surgical planning solution and surgical navigation, the two things tied together. And that's just what's on their initial product. We're here in New York, actually, at the moment for a conference called ISTA, International Society of Technology and Arthroplasty. And their next generation product is converting 2D images, X-rays, into 3D images and be able to do the same thing for surgical planning. So you can be able to take, whether somebody's using an X-ray or a CT, and automatically convert that image to a surgical plan. So you're not going to impact workflow, and you're going to make it easier for surgeons to be able to plan their surgery. So you're positively impacting outcomes and the system itself in precision medicine. So that's exciting to see companies like that. And it's fun for us to be part of that.
Absolutely. So as we mentioned, with regards to, the trends, MDR is changing the landscape. We've talked about, some consolidations that are forced. Innovation is still strong. We mentioned robotics, but it's actually something that Europe does quite well. They have a number of programs that help companies that have innovative solutions to grow, and they help fund them, which is actually a really good system to get new technologies to market. We talked about the overall and uncertainties, and at the end of the day, there are more exits for the small to medium enterprises that are out there.
There is so much interest in that right now. I was just in London last week for a healthcare private equity seminar hosted by McDermott. I'll give them the plugs and say hosted the event. There was a lot of private equity from throughout Europe, from London, from the UK, and even from the US. And they're looking for European SMEs. And so the market, if you're just like in the US, if you're a good quality company, the market is there. Fortunately, we're working with a couple of those, so we're able to see that excitement firsthand. So it's continuing to be a good market for those companies, those middle market companies that are doing the right thing.
So if you look at, at the outlook, we talked about MDR creating some issues, but every issue creates an opportunity. And so there's a lot of opportunity for those companies, if they're based in Europe, to want to go and do a deal in the US. That's something that they're looking at. So it's creating opportunities for those companies.
And PE firms are doing more cross-border deals, as we mentioned, because they used to be
Very US-centric, yeah.
You would have some international firms, but you get a lot of them that would just do US, only do US, Europe, only do Europe. But I can tell you at the London seminar, I met a lot of European companies looking to the US and US companies looking to Europe. So they're getting more and more comfortable with international cross-border deals, which is great to see. It's good for our business, of course.
Absolutely. And again, mid-market deals are in more demand than ever. It's definitely the sweet spot for M&A, without a doubt. Governments, as we just mentioned, are still investing in technologies, and you have European programs, but you also have country-related programs, which actually gives a lot of opportunities there. And then what is kind of ironic in a way is US is viewed as unstable by some. With that said, it's still the biggest opportunity as far as, medical devices are concerned. We're still the world's largest marketplace.
They only view it unstable because of the headlines around politics. And then once you get past that and they talk about economics, they're always happy to be here and happy to do business in the US because it is the world's largest market opportunity, period, end of story.
Absolutely. So looking at Asia Pacific, which is our third region, that we're looking at today, definitely a different key topics to look at. So
yeah, and we'll restate that China's not in a recession; they're just in a recession towards when you think about their historical growth.
Correct.
That they and they could actually be in a recession. They just don't report one because you don't really actually know the numbers that they're reporting if they're accurate or are not, right?
Yep. So we should change that to the fact that they're facing some pressure both internationally and internally. Might be a better way to put it.
Yep.
Agreed.
And then Taiwan is getting pressure on, as you understand, they're being their big brother next to them, unfortunately, is putting some pressure on them. So that's creating some uncertainty for Taiwan. We're hoping that they can hang in there. Japan. They're a little shy on internal M&A. However, Japanese companies, they approach us all the time. They are looking aggressively across borders, looking for add-ons, companies of all sizes, that are strategic additions for them, but also even bigger companies to be able to grow. They want to bring technology back into Japan for their country there, but they also want to take other markets and they want to be more aggressive in building growth in other markets. Because the Japan market itself is kind of limited by the population they have and the aging population that they have. So Japan companies are very aggressively looking for M&A, and we have a good relationship with a lot of them. So we're kind of enjoying that.
Absolutely. They're looking for innovation without a doubt. And then, things that we've seen happen, and that was, continuation of, the shutdown with COVID, but manufacturing moves from China to Vietnam, Malaysia, and Indonesia are still taking place.
Which is having an impact when you look at companies. You got to understand what's taking place there. And then India, I think, is now the world's largest
population. Yes.
Yeah, it's a country. It's a country not to be ignored, for sure. There's growth happening in India, and India, just like China, has multiple tiers, multiple levels of its economy. There's a high end, there's a middle end, and then there's a lower end. And when you think about a country of almost 1.5 billion people, and if only 10% are in the high end, that's 150 million people. That's bigger than most countries in Europe. So there's opportunity there. You have to be careful, but you need to follow it. And if you want to be a global player, you should be paying attention to what's happening in India. And if you're going to do business there, though, it's really important to have somebody in India to work with, because you need to understand the situation on the ground.
Absolutely. I would add one more thing, is that for some of the companies that are looking to validate, some products or do test markets, also India has definitely gained a lot of presence. Absolutely.
The other topics, so we mentioned, manufacturing is going through changes, mostly the geographical ones, seeing some automation, continued growth, that sort of thing, which fortunately TMD magazine talks about all the time, which is great to see how they observe those trends. AI is perceived to be everywhere, especially in China. Everybody tells a good story there, but is it really? We talked about that a little bit. And then COVID PTSD. COVID's not so prevalent. Obviously it has hotspots everywhere. I mean, in some places around the world, but for the most part, it's not as prevalent as it was. But there's still a PTSD in some places, and I think China is one of them because of how things were handled there. And so that's still a huge issue to get through psychologically as far as where we're at and where things are going.
Absolutely. Now, when you look at trends, China, as they've mentioned, was a key investor, or they did a lot of, joint ventures with different countries, and specifically in the US, to get, companies here and there. And this is changing, as we know. So China right now, more difficult to get their money out of the country to go and invest outside. So especially when it comes to the US, there's a limitation of what they can do. So they have a tendency to look towards Europe and other parts of Asia. And we're seeing also a lot of movements to Africa. Now, it doesn't mean that Africa is going to become the #1 place for medtech in the near future, but there is, it is worth noting that they are doing actually some investments with regards to medtech in those areas of the world.
And like other places in Asia, the aging population is having an impact on the economy. And I'm noticing time, so we're going to try to push through the next few slides so we can take any questions.
Absolutely. We're actually close to the end.
Yeah.
So
I think we covered this already.
Absolutely. So just wanted to kind of give you a quick little overview of some of the deals that have happened so far this year. And as we mentioned, the biggest one to date has been $3.1 billion. We haven't put, of course, the mid-market ones. We just wanted to give you, a couple more to look at. And there's some more that are coming, Bausch & Lomb and Novartis definitely would be a big one. They're currently looking to fund that potential acquisition. We'll see where they go with that, but there's still, quite a bit of money being exchanged.
Yeah, so for the most part, I think what the strategics is around portfolio, tweaking. Some people are divesting, some people are adding, and then mid-market deals. That's really the bulk of the market right now. So in the summary, for how we're seeing MedTech M&A in 2023, the bottom quote that they were talking is our trend for strategics, and we're seeing that's really true. So that's leaving us really bullish on the MedTech M&A market for this year. We talked about this is a good time to sell if you have a quality company, somebody that does. This would be a good time to do it. Later next year, when we get into the thrust of the election cycle, if you watch CNBC every day, which like I do whenever I'm back in my office, you got all these experts, and 50% say we're going to be in a recession, 50% say we're not going to be in a recession. So who knows? But there's certainly a risk of that towards the end of next year. So right now it's a good time. People are still bullish on the marketplace. There's capital available. So if you're thinking about it, this is a great time to go out into the marketplace. And it still could be again next year. We hope we're saying that next year on this webinar next year. However, it may or may not be. So there's just a risk around it.
Absolutely.
And it's a competitive world out there for buyers, and which is making valuation strong. So that's it for us.
Wonderful. Thank you both, Florence and Dave. Always a great presentation and great insight what's happening, and nice to hear what's going on across the world in other markets beyond the US. We appreciate that. And I don't see any questions that have come in, so I think we will wrap this up a little early. I'm going to thank our sponsors again real quickly. Our 2023 webinar sponsors, ISCAR, a leader for nearly 70 years in the development of a dynamic and comprehensive line of innovative precision carbide metalworking tools. I'd like to thank Renishaw, a global leader in developing technology that supports manufacturing process control, offering an advanced range of calibration, measurement, positioning, and inspection solutions. And then I'd like to thank today's webinar sponsors, Hawk Ridge Systems, a leading provider of engineering and manufacturing tools, technologies, services, and training in the US and Canada, and Makino, an industry leader in machinery design and digital innovation. Makino introduces game-changing solutions for premium performance, producing accurate, high-quality metal cutting and EDM machines. Thank you to MedWorld Advisors for always presenting. And as a reminder, you can find all of our upcoming webinars online at todaysmedicaldevelopments.com/webinar. Thank you all. Have a great day.
You can find more Manufacturing Matters plus the MFG Radio Network's other podcasts on Apple Music, Spotify, Google Podcast, or on our websites